I just want to go over what we're kind of looking at here. We've seen the yen gain about 9% to the dollar over since the start of the third quarter. We've also seen the BOJ raise rates. That's kind of unwound that yen carry trade. Just for the audience, this is obligatory, Tim. I know you already know this. The yen carry trade is when you borrow the yen, lower interest rates, you invest in a currency with higher interest rates. It's obligatory. We got to make sure everybody's on the same page. My question for you, Tim, has that unwound? Has that completely unwound, or could we see it respark?
Okay, so let's to keep things simple and break it down. The data is not fully available or transparent, so we've got to play a detective over here. The key points would be that there's clear evidence in the markets that at least some portion of the trade has been unwound. I think a fair portion of it, given the large amount of liquidity in the U.S. dollar, Japanese yen currency markets, the severity of the move, which clearly triggered stop loss provisions. So any risk manager would have forced holding to be unwound. If we want to look at some objective data, you can look at the net non-commercial short yen positions that the the Chicago Board of Trade publishes every Tuesday, and that went from record lows, record short positions in the beginning of July, to much more normalized positions as of last Tuesday. We're going to get this coming Tuesday's data shortly. So I think we put some clues together. We can see that the offshore speculators who are borrowing in yen either invest in other currencies or other assets, might be U.S. tech stocks or Japanese equities. I think a good deal of that position is cleared. However, last data point I'll make right now, if we look at the net foreign investment into Japan this year, it's still $26 billion as of 2 days ago, whereas for the rest of the Asia-Pacific region, it had come down to basically flat. So I think there still is some length in the Japanese equity market, and that suggests there may be still some risk positions that are on. Back to you, Frank.
So you think there's still, by the way, I like the way you tossed it back to me, Tim. So you think there still may be some risk positions that are still on. What's the potential impact to the rest of the global market, specifically here in the U.S., if you think that there still might be some more leg to it, just people that haven't had a chance to unwind yet? That's what it sounds like. Tim, are you there?
Sorry, we lost each other there.
Okay, let me ask you this question again. We had a quick technical difficulty.
Sorry.
Yeah, I can hear you just fine, but we're going to recover right now. So you're saying that there may be some more to this yen carry trade that still is left to unwind. What's the potential impact to the rest of the markets around the world, specifically the U.S.?
So I think specifically for the U.S., the area you have to look at is the offshore, the Japanese money that's gone offshore over a long period of time. If you look at balance of payments of data, there's over $2 trillion that's gone out of Japan over the last many years, because Japan's had low interest rates and has been in deflation for a long period of time. About 1.3 trillion. This is somewhat lagged, but still, ballpark a good number. About 1.3 trillion is invested in U.S. Treasuries or in U.S. dollar bonds. Now, we think that money is actually fairly stable because even with the spread differential, the rate differential between U.S. rates and Japanese rates having compressed, you still have a wide absolute gap of about 4%. So in other words, it's a lot cheaper to borrow in yen and invest elsewhere. So we think that fixed income money is fairly sticky. It's the higher frequency, more speculative aspect of people who are speculatively borrowing in yen in order to put that money elsewhere, which we were discussing just a few moments ago, which is the area which is more at risk. As I said, it's hard to get precise quantification of that. We think a good deal of that is cleared. If I had to pick a number, maybe 75% or so. But in other words, there could still be more which should come out. But I think a good deal has been unwound of that, very short duration speculative money.